Thursday, April 27th, 3:03 p.m. New York time. Good afternoon. We are so close to the end of the month. This is the last trading week of the month. So I want to look at the higher time frame, the monthly candles, because we are completing the fourth month of the year, which is in the second quarter of the year. And looking at commodities. So first I want to take in content, looking at the 10-year yields, which reflect the U.S. interest rates and dollar, to understand there's a correlation with the commodities. So we're looking here in monthly chart. Each candle's a month. The current one's not done yet. Be done this Friday. This is the 10-year yield. Yields go higher. Interest rates go higher. Small trading range. New low for the year. Still tight consolidation here. Why? Because when the commodity companies borrow money at a higher interest rate, they're paying higher money. U.S. dollar declining, small trading range down here in this zone, a demand zone, also this midpoint right here, the monthly. So if the Federal Reserve, the next time they have the meeting, raise interest rates higher, you expect this dollar to go higher. Correlation to U.S. dollar, commodities all priced in U.S. dollar. That's some basic information I want to share with you. Okay, let's start looking at the commodities. Looking at the energy, crude oil. Crude oil currently $74.84 a barrel. Recently, you might have been in a situation where OPEC, the top level OPEC, said they're going to cut back production, which typically affects the prices to go higher. Short term, the prices did go higher. So looking here, new high for the year. That was the original the high for the year. We made a new high for the year, but we're rejecting it. Yeah. So still tight consolidation range down here. Let me show you here on the daily too, so you can see the effect of that. Was a Friday night. That was a Sunday night. Over that weekend, OPEC said they're going to cut back production. Sunday night when the futures market opened, we gapped up higher for crude oil, did a consolidation, and then that pump up one more time. I had bearish trades up here. Yep, that was bearish. I was looking for prices to stay below. They're all closed for profits already. And then we rolled over as expected, went lower. We filled the gap as was expected, went below the gap here. And look, coming closer to a zone, a demand zone. Look at natural gas. New low for the year. Huge sell-off since last year. There's a big demand for natural gas, but the production is even bigger. There's so much of it coming out of the ground. The United States did not invest in big storage capacities, so a lot of it has to be sold or burned off, wasted. Yeah. Where you have European countries, other countries too, building storage capacities so they can have more reserves ready, so they don't have to be, they're being compliant without having to buy oil from Russia because there's sanctions against them, nor support that regime. Yeah. Huge. Again, more output of natural gas than there is use for it or storage capacity. So we can continue going in a sideways move and stay low for a long time like this. In the United States, the utility companies, your local utility companies, majority of them get most of their energy, create most of their electricity from coal and then crude oil, not so much large percentage of natural gas, all of them. So if they convert it over to natural gas, your utility rates could be lower. If the trucking companies, the buses, the cars were using natural gas in the United States, you would have a huge savings because the transportation industry, getting the food products and the other stores to retail stores that were on a natural gas, they'd be saving money, pass that cost on to you. But again, past leadership and the current leadership in the United States has not invested in manufacturing of natural gas vehicles, nor at your state level. Your governors have not requested, lobbied, regulatory, your utility companies to use more natural gas and less coal and less crude oil. Yeah. So again, it comes out to be the most amount of people are screwed. So takeaway again, natural gas near record lows, crude oil going lower. How about your utility bill? Think about it. Look at the beginning of the year to now, what your rate increase is. Again, in my state, Florida, the rate increase has gone higher. The governor has to sign off and approve of that. It's not the president. It's the governor at your state level that oversights the regulatory body that regulates and approves the rate increase. And we have rate increases. Again, when your utility plant is directly correlated to getting crude oil, you can see spikes in your utility bill. Well, again, this is declining. So why is my price going higher? I understand usage may be more, but again, they are making profits. And it's not being passed on to the consumer. No, because they're making profits because the rate's going higher. Just some deep insights. Going on to the agricultural. Corn futures, huge sell-off. New low for the year. Look at that. Took out that swing low, broke the low this year. Nice. Corn is also a product that's used for feed for animals. Corn is also used in ethanol for gas. Yep. So why is your gas not going lower if it includes corn? Plus, it's your, again, utility company. Thinking about it. Do something about it. Make a phone call. Wheat futures, new low for the year. Nice. Also took out, again, that low from prior year. We're almost down this low. Nice. And soy, again, huge sell-off, new low for the year. And soy is used widely. And live cattle, new high for the year. You all eating more beef, more red meat, new high for the year. Look at that. Almost taking out that high from all the way back there, 2014. And then feeder cattle, just like it says, feeder cattle. They use this cattle to feed other animals. Look at that, new high for the year, huge impulse move up. So is there more demand for this product, or is the embedded cost making it higher? I won't share that to you. I'll let you do your due diligence and you research. Yep. It's very interesting to know the facts behind what's happening. Because again, this could be passed along other ways effectively. So there we go. Broad commodity markets. And because we're coming to the end of the month, you can see where the rotation has been out of. If you haven't taken gains, or if you're looking to buy on a dip, you already see where the leadership is and not so. Again, we're going to finish this down here by understanding the US dollar. US dollar has a big effect on the commodities. So if this continues going lower, we might see a spike up in commodities. Vice versa, this goes higher because we're at this key level. We might see commodities go lower. It's not this financial instrument that's making the big impact. Cryptocurrency Bitcoin, nope, it's not. It's the almighty dollar.